Hello, this is Ashraf Laidi, and welcome to this new edition of the video market analysis. A lot of important things are happening, so please pay attention. Please pay attention. And the reasons that this is long, these videos are long, is because I tend to repeat myself and I tend to emphasize things, so people will have it in their mind, will stick. So I'm just going to say everything only once, mostly at least. Okay, so we've got a lot of things here. I know there's a lot of questions regarding the sterling trades, long euro sterling and long sterling dollar. I'll leave that for the end, but I'll really talk about gold and why it's important. And I left some important voice notes for the WhatsApp members, WhatsApp group. A lot of people were saying in the WhatsApp group, shall we sell? Because it's a more of a frequent, high frequency trading group. You know, I tend to scalp, we tend to short sometimes and long in the same week in the Dow and in the same DAX. If we're long, let's say the DAX or the Dow on the market, or let's say if we are short the Dow and the market goes up, I tell the WhatsApp group to buy the DAX because that's the one that I'm leaning more towards gaining. Or sometimes they're buying, we're saying buy Dow, and it goes up, and then it goes, and then if it goes against them, then I'll say, well, stick with the buy Dow, but if you can make money quickly by shorting, let's say, the S&P, and then okay, this is where you get out. Now get back to the buy Dow. This is important. This is for the WhatsApp members group. Basically, you have to be subscriber for the premium insights for 6 months or for 12 months. Uh, Now, gold. Here is the important thing. A lot of people, WhatsApp group saying, "Well, should we sell at 1777? It hasn't broken 1780. It hasn't broken 1789. It can't break 1790." A lot of people saying, "Oh, it's going to break. It's going to break. The move is done." And really, a lot of amateurs, who were right 3 or 4 times, they come on Twitter and they tell me, "Oh, the move is gone," and they will tell me some wave analysis or whatever. A lot of people can be wrong. I have no problem with that, but to sound so sure. So let me just to take a stab at this. And we were finally lucky. We closed the 1795. We hit 1795, 1790 after we went long at 1690. Just an idea here for our gold trade. So I think it's time for us to issue a long one here. But we're making money for the premium insights, mainly long. We went short here in March, and we did well. Now, here's the $1 million question, guys. Very important for everybody. Very important for everybody. Um, Listen, based on these triangular things here, if you remember on February 18th, that weekend ahead of the 21st, I said this is why gold is going to go here to 16. We were here. This was a weekend. I remember February 21st. On the weekend, I said this is why gold is going to go to 1680, I believe it was, and I gave the move, and it was based on a triangle here, and we did, and then we came back down. It was really well timed, and so here is why I think a lot of people are asking me. So we should gold is 1800. Shall we short? Shall we short? And no, don't. I think it's going to go to 1835 in this current move, and that is why, and that's the main move in here. You have basically a triangle, and it's the same thing as you had here. So you had this triangle. The distance of the triangle, the distance from high to low was overlaid, and we hit here. And then the same thing, this distance from low to high, triangle broke, and this distance was overlaid here, and I think it's going to go to 1835, 1836, and that's why I think we're going to see it probably this week. There's a lot of things going on. The Trump administration suggestions that they're going to go do something bad with the Hong Kong dollar, with the peg. That's going to be bad, and if they do ever try to do that, it's going to be negative for a lot of other dollar-pegged currencies. So that's why I think this is happening. There's something here which is very, very important. What I said. Um, Basically, the last time gold hit 800, 1800 was in August 8, 2011, and interest rates were 4 times as much as now. This means now they are 4 times less. Also, back then in 2011, gold was nearly 3 times the S&P. Okay, it was nearly 3 times the S&P. Okay, right now gold is much less, so it has more upside. So gold was more expensive, more overvalued. It was 6 times the Nasdaq's. Now it's probably one or two. It's less. It's 2 times. There's something regarding the Dow. I'm going to let you know. But gold was 86% on the RSI on the weekly in 2011. Now it is at 66%. Gold is right now 66% RSI. It is not on the weekly. It is not considered as overvalued. And if you think gold is too expensive, so think again. Based on all of these interest rates, which is the competitor of money, used to be 6 times higher. Now 4 times higher. Now it's 4 times less. There is less competition for it. More importantly, what's going on with the U.S. President and the deficits in the U.S. Budget and current account and pushing both higher. That's why that's nearly 10% compared to back around 5 or 4%. That's one reason, and the other thing that the things that are going on at the White House. Uh, whether you agree or not, or whether you know that there's something appropriate or not, that's up to you to decide or to discern that. But so here is, we should have probably, some people said, well, why did you close it? Well, we've been sitting $100 and we just wanted this to hit. But I really think that 1835 based on these measures. And if you really look at this, um, the RSI, this break is pretty interesting. Okay, so we are 71, and I think we're probably going to go to 1835 and have a pullback. All right. Just very quickly before I go to sterling, this the euro dollar. I really like this chart here. Um, I really like this chart, ladies and gentlemen. And basically, very simple chart, okay? Trend line here, support, and we've broken it. But then as we broke this, we came back to rest around the trend line support. Many of you have been saying that the euro is done and so on and so forth. But there is more sophisticated analysis, and I would like to pride myself here for giving you some technical analysis. In the last video, I said, which is something pretty amazing what we had. This, just like in 2017, the period between first breaking above the 200 DMA and the golden cross 55 over 200 is a month. Okay, so May 27th, and then 55 over 200 is around 6:30, June the 30th. And this was a month, and a month elapsed. It's the same thing as 2017. We showed this. I'm not going to show it again. Now, what I need is that for the 100 to go above the 200. So it's basically the second sort of, so to speak, golden cross. And this will be to have the ultimate trend confirmation. Okay. And this is likely to take us toward at least 114. Okay, very, very important. Even if you don't believe in this moving average and these crosses, this is basically speaks by itself. Now, and there's something interesting regarding the Dow. But the Dow, gold regarding the Dow is very similar where it was. So the Dow did not do much, and that's why showing you that the Nasdaq has done a lot, the S&P has done a lot since gold hit last time since 2011 when it hit 1800, and that's why gold and that's why Nasdaq and S&P have rallied so much relative to the Dow, and that is seen where gold went up and down what it is, and it's similar to what the gold to what gold relative to the Dow is similar what it was. Now, so this is one thing, and the other thing is sterling dollar. So basically, so sterling dollar, I believe that we're still, there was a nice jobs related, the New Deal by Sunak of the Treasury, creating $3 billion worth of job schemes and everything. But here's the thing. So we went long finally sterling dollar today between 25 and 25.10, and it jumped to 25.55. So the WhatsApp group yesterday, I said we're going to go towards 25.50, and we hit 25.70. Okay, it was yesterday in the WhatsApp group where I actually said it's good to long euro sterling and euro dollar. So here's the sterling dollar part where I think that we're going to go to at least at 26.80. Okay, this is on the daily. And then if you go to weekly, this trend line becomes trend line resistance not 26.80 but 27.80. Okay, so you look at it on a weekly because you're connecting the wicks here, and it becomes really 27.80, and then you have the moving averages. But euro sterling is also looking good, and I think one is going to precede the other. So basically, euro sterling is going to take a while for it to rally because it has been doing all the work. Remember, this is the third time we're going into this. Two previous trades did very well. We made money in them. But I think that because sterling is doing well, so relative basis, euro sterling is going to struggle a little bit, even though broke trend line support, I think really from 89.60 is really the key support. But I think that this is going to take a while to recover, and it will. In technical analysis, you just basically look at the trend lines, and when they do fail, you look at the left side and you see where is the logical support. Just for those of you who just knew, so basically, so here's we are here. If you look at the charts that we did, so we released both for Euro Sterling and for Sterling. Okay, so this is in Arabic for the Arabic speakers underneath there. But basically, sterling dollar, so basically daily, the trend line resistance coincides with 200-day moving average. Sterling dollar cable weekly, around after that is 27.50. We broke the RSI, and the Euro Sterling basically is, if it's gonna come down, it's gonna scare a lot of people into possibly breaking the trend line support. But that's where the action is here with the RSI. And if you speak Arabic and you speak English, then you're a lucky person because we have analysis here for both of the premium insights. More importantly, and this is the last Euro Sterling trade. So this is probably the most consistent one as far as success. Last two longs made money. This one the first one took a while. We had to lower the stops, but this is basically where it's at here. All right, so very interesting here about the gold versus the Dow. And the other thing that is really helping is that silver in 2011, when gold hit a high, it was basically very high. But now here it's doing well. It may not be evident here, but if you look at the weekly and you look at the RSI, it's still hungry. We're still 62. But very interesting just to see when gold hit a high on August 8th at 1800, where was silver? And the interesting there is that silver peaked before gold around April. All right. And then by August, it tried to recover, but it was clearly a lower high. But that's where it was struggling. So, and the RSI, look how they are. It is a lower high. So that's one of the many examples that I use into market analysis. But here we're still on the upside, and this guy is still nowhere near the highs. It's ready to break. So this is very potential, and that's why I always look at the um, gold to silver ratio, which basically tells us that as this guy goes down, remember we alerted you to go to long silver just before we broke the 100 and we bought silver. So I think there's more gains for silver. And here is where gold silver is going to come back down. And that's where the silver's next move. So this is where the situation is. Notice we haven't mentioned indices because the action is in FX. It's in the dollar. It's what's happening with the U.S. administration, and and that thing that I said, basically, if they're going to try to do anything with the Hong Kong dollar, that will imagine what China will do and how it will try to retaliate. And that's why euro dollar, and right after we finish speaking right now, euro dollar is what 12.80 now, is 113. So basically, what we said here is very, very important. So get on gold, be careful, have its various longs. We think 1832, 1835 is the next big move, is the next move. A lot of people are going to say it's time to sell, it's time to sell, but look at the big picture. And, not the time to play with indices. Don't waste your time with indices. The Dow is between 25,850, 25,750 and 26,200. It's not doing anywhere. Don't waste your money in there. A lot of action. There's more trending moves in FX. Okay. Again, for the WhatsApp group, I'm going to do. We had a lot of great testimonials from the members of the WhatsApp groups of the last 2 months. I'm going to publish them and tell you why really it's a good idea for you to join by having to be a pre-order, getting the 6 month or the 12 month subscription, which is effectively per month basis cheaper than having 1 month basis. Thank you, and all the best.